Hello, welcome back to this channel. If you're new to this channel, please try to like, subscribe, and share. And today's class, we'll be looking at transfer pricing. Okay, transfer pricing. This topic is actually relevant in the performance management for those writing the ICANN and ACCA exams, and also relevant for those writing the advanced performance management in ACCA exam. All right, so in today's class, we'll be looking at the meaning of transfer pricing. We'll be looking at the objectives of transfer pricing. We'll be looking at the types of transfer pricing, and finally we'll be looking at issues or problems associated with transfer pricing. All right, so basically I'll just do a run through everything that I've just mentioned, those highlights, and then we go into a typical question and how to determine transfer price and how to look at issues around transfer price. So to speak, what is transfer price? So transfer price is basically the price at which goods and services are transferred from one division to another division. It means before you can think of transfer price, there are divisions, meaning there's more than one division, and those divisions actually exist in one organization. All right, so the price at which these divisions transact. What are the objectives of transfer pricing? The first objective of transfer pricing is goal congruence. What does that mean? Goal congruence simply means that regardless of how much these divisions are willing to transfer these goods and services, the overall objective of the organization must be met. And of course, the organization wants to make profit. And so, regardless of the prices they are selling those goods and services within the group, the overall objective must not decline as a result of their decisions. All right. And so number two is autonomy. What is autonomy? Autonomy is simply freedom to the divisional managers or to the divisions to be able to set their own prices. Setting their prices means that they can decide what they want to do in that in their division. They can set their prices, they can set the maximum price, set the minimum price, and the essence is just to ensure that at the end of the day they are able to make reasonable profit for that division. All right, so first we've talked about goal congruence. Secondly, we have talked about autonomy. So the third objective of transfer pricing is motivation. All right, motivation is coming from the fact that divisional managers are given autonomy to set their own prices. And if they have the power, the ability to set their own prices, it means that they are motivated. And the fourth one is performance evaluation. All right, so at the end of the day, each division is going to be held accountable for whatever profit they've generated from their division. So transfer pricing helps evaluation. All right, so we said already that transfer pricing is the price at which goods and services are transferred from one division to another division within the same group. All right, and we have said also that before transfer pricing can exist, it means that the division or the organization has more than one division, and those divisions are actually willing to transact, to do business or to sell and buy from, each other. All right, so now look at, if I have head office, this is a group. All right, and we said the group has two divisions, division A and then division B. All right, so we said already that these two divisions must be willing to buy and sell. So let's say that this division is the selling division, and this division is buying division. The price at which division A is willing to sell and the price at which division B is willing to buy. All right, and this price is what you call transfer price. Transfer price. So when you talk of transfer pricing simply refers to the transaction between the division within the same group. How much is A willing to sell and how much is B willing to actually buy from A? And basically, that's the basic overview of transfer pricing. All right. So what are the problems of transfer pricing? Problems of transfer price or transfer pricing. The number one problem is determination of an ideal price, ideal transfer price. All right. Determination of ideal transfer price. Ideal transfer price basically refers to the transfer price that satisfies all the profit objective of these people in the group or in the circle. Look at, I have the head office here, which is the group. I have division A and I have division B. When I talk of the ideal transfer price, I'm looking at what transfer price will maximize the objective of the group, what transfer price will be acceptable by division A, knowing that division A is the one selling, and what transfer price will be acceptable by division B that is also buying. All right, considering these three together is what we refer to as ideal transfer price. And most times, determination of this ideal transfer price may be a problem, meaning that division A may be willing to sell, but division at a price that division B will not be willing to actually buy. All right, and also when it comes to ideal price, the ideal price that will be acceptable by the tax authority will also be a problem, especially where you have divisions that are in different countries, right? One is in country A, another one is in country B, right? This issue actually arises where the countries have different tax policies, have different tax rates, all right? And some organizations over the years have actually used transfer pricing to, move revenue or move profit from one division or from one country to another country. And this has actually caused issues between organizations and the tax authority in the relevant country. And so determining the ideal transfer price that will be acceptable by tax authority may also be a problem. All right. So the number two problem of transfer price is what we call conflict of interest. Conflict of interest. We are all aware that each of these divisions, they are all rent seeking. These divisions are rent seeking, meaning that they are all profit centers. If they are profit center, it means that their emphasis will be on how much profit they can generate. So division A will be willing to sell at the highest possible price. Division B will be willing to buy at the lowest possible price. All right. So because of this different interests, there's bound to be conflict between division A and division B. All right. And so these are the two problems of transfer pricing. All right. Thank you for watching. In our next class, we'll be looking at the types of transfer pricing and also how to compute profit for each of the divisions and also how to determine the ideal transfer pricing. Please subscribe to this channel and share. Thank you for watching.